Banks are subject to the Red Queen's race. Because of the way they've built their systems, because of all the regulation that's been put on top of them, they're slower to move. If they actually want to move at the speed that fintechs need to move, they need to overcome that initial inertia, plus they then need to move at fintech speed. They need to run twice as fast to even get anywhere.
Banks are still spending millions of dollars to stand still. The top 100 banks have spent more than $1 trillion on digital transformation in the past 3 years, but the majority has not led to revenue growth. The cost of maintaining tech rises with every project. New technology is piled on top of decades of tech debt, compounding the complexities and therefore the costs.
I know one stat for a relatively large incumbent bank is that for each dollar spent on new tech, they spend $9 doing the tie back to old tech, right? So when you've got that type of legacy and you're carrying that around, it doesn't make you nimble.
Banks face a huge problem. They are saddled with the legacy systems that throw back to the 1960s that they have to maintain, while also trying to innovate and build new products and services on top.
The mismatch between what is demanded of by the customer and what is easily buildable on top of legacy architectures is going to get larger and larger and larger. The legacy banks, like crappy ancient dinosaur technology, is really holding back the UK, and it's really holding back the kind of products that we can build.
Banks are currently tied to this anchor of the historical legacy of technology. The change will happen when they realise the problem isn't actually their underlying technology, which works. We talked about before about the mainframes. They actually work well as a core ledger capability. The epiphany and the journey the banks need to go on is to realise the thing holding them back is almost certainly their governance processes.
So I believe that the cultural challenge is now bigger than the technological challenge. So the organizational structures are probably the last part of the equation to catch up.
Yeah, I describe digital transformation as nothing to do with technology. It's to do with culture and mindset and how a bank thinks. And if a traditional bank wants to become a digital bank and to fully embrace the open banking ecosystem of the 21st century, they really have to change the whole organization's thinking.
Technology is not the bank's biggest problem. It's how their organizations are structured around that technology that is holding them back. New tech will not solve their problems by itself. The processes that banks have put in place do not help them hit their goals efficiently.
A bunch of old dudes sat in the back room somewhere and they made a policy 40 years ago. And getting banks to realize that they need to rethink their policies and what that means and how it runs through the entire structure of their organization and institution, that's where I think banks have a cultural challenge and incentives need to be aligned.
Organizations, including banks, have put in multiple layers of people. Basically, it goes from development to QA to user acceptance, and then it's deployed. And each of those steps, there's multiple layers of people that have to be satisfied before you can actually move to production with it. That takes forever.
At most financial institutions, no one gets a promotion for saying yes, but you definitely get a promotion for not messing up. So saying no brings something more to those employees than saying yes does, because it's lower risk. So, and obviously you don't want your bank to take too much risk because they have your money. It's a really challenging balance that has to be struck between taking risk and making progress and not messing up your institution.
These layered processes around technology deployment are systemic and deep-rooted across the industry. But why was it set up like this in the first place?
Computers used to be big things, and there was only one of them. So if you only had one mainframe and you could only run one bank software monolith on the mainframe, you had to get everybody to agree what the changes were going to be in advance, which meant you had to plan very, very carefully and write the code once and deploy it, once. And these sort of monoliths sort of meant that the risk of getting it wrong was much higher.
Well, actually, if everything is difficult and we have to be really right, well, we're going to be really, really risk averse, which means we're going to spend tens of millions of pounds on strategy at the beginning of a process, because actually we kind of can't afford to be wrong. If we are wrong, and it's going to take us another 9 months to fix the problem that we've caused for ourselves, that's just a really negative cycle to get into.
So because of that, we've just built structures, we've built organizations where there are people who have 20-year career managing change. They're change control board managers, they're people whose job it is to make sure that you've filled out the Word document that tells you how to deploy this software and roll it back. And they have no concept of like what it's like to work in a world where you deploy small changes many, many times a day and roll them back continuously. So there's this big cultural difference between people who've worked in companies that were built on top of mainframes compared to companies that are built on top of distributed systems.
How banks work hasn't changed in decades and is based on governance processes that were built for an analog world. To become truly digital, these models and processes must change. But where can they start?
If you don't create a culture of experimentation, then actually, you can have the best technology in the world, but people won't experiment. Again, if you have a culture that is looking to penalize failure, then people won't try. So actually getting the incentives, getting the structures, getting the decision-making processes, getting the communication capability in place internally to an organization is really fundamental to making it happen. And sadly, it's the hardest thing to fake.
And companies that can experiment much faster end up beating companies that can't. And waterfall is a methodology which is incompatible with rapid experimentation, whereas agile it's all about like time to market and time to iterate.
It's not only new technology that fintechs and big techs are adopting, they're also adopting new methodologies around the technology too, such as agile, which permeates the culture and creates an organisational structure that's completely different from the traditional banks.
In a fintech, the environment is designed to encourage people to roll software out quickly. The infrastructure and the reporting lines are set up such that autonomy and responsibility is devolved down to smaller teams, and they will roll stuff out quickly. In a bank, the environmental pressure is not actually to roll software out quickly, or indeed to enhance the customer proposition. It's actually to make sure that you don't break any rules. Those rules are often internal self-imposed rules. So as a result, the people in power in a fintech are typically your software engineers and your product people. The people in power in a bank are typically your program managers and your lawyers. Your software and your product people are relatively low in that food chain. As a result, the infrastructure in a bank and the governance process in a bank is designed to make sure that no one makes a mistake. If you make a mistake, that can be career-ending. In a fintech, making a mistake is clearly bad, but they are designed to be able to learn from that and to make sure that actually the processes are put in place such that when you roll something out quickly in the future, that mistake isn't made again.
The culture and the way fintechs are structured allows them to roll out software quickly, efficiently, and in a completely different way to big banks.
A lot of legacy banks have this concept that the person who writes the code shouldn't be allowed to deploy it to production for security reasons. But what that does is that creates this sort of like perverse reality where people who are writing the code don't care as much because they're not going to be there the night the person tries to deploy it. And I used to deploy bank software and it used to go wrong all the time. You'd put it into production and it would just fall over, and then you'd have to spend 3 o'clock in the morning trying to roll it back and roll the database back and everything else. That used to happen all the time. But that's still the way a lot of banks still do their deployments. They have deployment armies and they'll have 18 people and a change control board and engineers on call around the world and Word documents describing how to put the software in and take it back out again. And at Monzo, we would just write code, run the tests, get someone else to look at it and give it a tick, and then you would deploy it the same day that you wrote the code, and it was still fresh in your mind, and you put it into production and make sure that everything was working, and then you'd roll it out to everyone and go on to the next job. It's just such a lower stress way to work that way.
Fintechs deploy changes regularly, whereas financial institutions work on quarterly cycles. This gives fintechs a competitive edge. They can respond to the market faster, iterate faster, and learn faster. Incumbents can't compete with their current tech and ways of working.
I think the biggest challenge for banks is the acceleration of pace of change, which breaks their whole model of how to evolve their own product offerings.
If everything takes you 9 months to do, then actually you've got to be really certain about what you decide to do in the first place. But also in that context, the market changes. There's many projects I've seen people spend £100 million on that actually at the end of it, no customer cares about it. Because actually the customer context, the market context is then fundamentally different to the one that they started in. And often it's not because they've had a bad idea, it's just if you're slow to execute, then the world has moved on.
If you have the correct governance process in place, actually you can roll software out quite quickly. If you don't have the correct governance processes in place, doesn't matter how great your software is, it will never get released to the public.
The mindset shift that needs to happen is you've got to stop trying to prevent failure and instead reduce the cost of failure. Then you can fail early and fail fast, and your war stories will be like, wow, that was a bad afternoon, instead of, wow, that was a bad 6 months. It all comes back to speed. Speed is a weapon.
There's no bank I ever come across on the planet that don't get this, but ideas are easy. It's all about execution, right?
Everything comes down to speed and how quickly you can orchestrate change. To compete and win in the banking battlefield, change is essential for any company, but especially traditional banks.
I actually think, many of them are doing amazing jobs with what they've got to contend with, which is huge amounts of technology debt, and actually the impact that that has then on their operation. Actually, with a 9-month change cycle, they're threading the proverbial needle kind of every 9 months about whether they're right or wrong with their strategies. But that model is dying, that model is changing, and actually a digital business can no longer operate in those types of cycles.
If your organizational structure remains legacy, the bottom line there is that you will find yourself structured to play and win a game that no longer matters. So many banks and credit unions today can play really well the game that they were playing 20 years ago, but nevertheless lose in a disrupted ecosystem against competitors that are playing completely different games.
Banks know they have to change, and they have the resources and scale to do it. But in order to make the change, it all comes down to a cultural shift.
Technology is not about technology. Technology is about people. When you do security, people say, I need the latest this technology or that technology. Technology isn't the thing that gets hacked. People get hacked. Technology doesn't build technology. People build technology. Technology doesn't deploy technology. People deploy technology. People, people, people. How do you free your people up so they can do the good work? That's the goal.